All right, everyone. A very good morning to all. Uh, as usual, this is gonna be a week ahead analysis video. Date is 30th of September 2024, and as I already have mentioned in my sentiment video, that it's last day of the month and we can see some unexpected volatility. However, sentiment is still staying the same. FX antipodeans leading the pack with the yen and Swiss franc classic safe havens down by close to 3%. Moving back to our topic, week ahead, let's quickly have a look where what's what's we're gonna have from 30th of September to 4th of October. But before that, let's have a look what we had last week. So starting with the PMI numbers, we know that the ECB has a meeting sitting in October, and the currently market has priced in 23 basis points, close to 25 basis points, and with the flash manufacturing services PMI is coming out from French, from Germany, all of them together are just beating the market expectations to the downside. As we can say, from the German flash services PMI came 50.6, manufacturing 40.3, and from the French side, services down, the same thing there. So final a composite to all of these datas end up being 50.5 as a services PMI from the Eurozone and 44.8, which is saying that clearly the Eurozone is heading to the downward. It's sitting in the contractionary zone. So is it wise for the ECB to go ahead and to cut in October? Well, it seems like that it will not be out of the ordinary. We just had comments from President Lagarde, and she said she's not gonna wait for the inflation to head back to 2% before taking any further action. So, we clearly uh, making the euro to sell off across the board. Uh, so with these comments and the other ECB members' comments, she leaning towards dovish, and with the current market pricing in, we can see a 25 basis points of cut on the October meeting. Moving forward with the Great Britain, manufacturing and services both came in a little bit down from the prior data we had, but as we can see that it is still above from 50. So what does that mean is that the above 50 mean the manufacturing and services sector is still sitting in expansionary territory. If it goes below 50, that means that it is gonna be in a contractionary territory. So with that being said, 52.5 was a prior data and came in 51.5. The same thing with the services PMI, came worse than expected, 52.8. With the marginal change in prior vision got up by zero point zero 0.04. We had Bostik and Kashkari. I think we haven't had much from them, if I remember. Kashkari. Okay, so 23rd of September, we do have some dovish commentary from Kashkari. Seems worried about risk of further labor market weakening along with supporting. So Kashkari was the one who supported 50 basis point of cut from the last meeting we had from FOMC. Now, moving back, we also had Bostik. Let's see if we have comments from Bostik. Oh yeah, so here goes 23 dovish commentary, supported 15 basis point cut. So Bostik and Kashkari seems uh, two participants favoring a 50 basis point of cut on the last meeting. However, he seems neutral on the labor market and pretty confident the US economy is on a suitable path. So it was a pretty much of a dovish commentary they made, but as the Fed already has moved 50 basis point worth of cut, the volatility we haven't seen after their comments because the move was already kind of priced in. Moving with The dollar again flash manufacturing PMIs, flash services PMIs, as we can see. And from the data perspective, we do know that services uh, tend to favor more in GDP figures than manufacturing PMIs. So services PMIs holds more weight than manufacturing sector in the US. So PMIs of 55.7 got revised from 55.2, and we got 55.4, which came in line, not very out of the deviation. It just stays close to the consensus from from most of the economists. Flash manufacturing PMIs came 47.0, and I think it is just deteriorating, as we if we just look at the data time graph. Okay, so line here it is. So if we're gonna look after the June manufacturing PMI, it's the third one continuously drop in manufacturing PMIs, and it this is something to worry about because it's a steep downward. However, as manufacturing tend to not go much in the GDP, that's why it has a less volatility across the board. But this is something to keep on the radar. On Tuesday, we had a cash rate from Aussie RBS statement we had, and the bank kept their interest rate at 4.35%, and also uh, the commentary we had from the Reserve Bank of Australia was pretty much hawkish. However, the market this is the only bank. This is the only bank that's still staying hawkish. Other than the banks we had on the board. If you look at the Fed, if you look at the ECB, Bank of Canada, uh, what else? BOJ is on a path of rate hike, but the market is expecting that they won't do it for this year, but they can do in future. So Swiss National Bank, they are also on a path of a rate cut. We will talk about that later on. But with the Reserve Bank of Australia, they pretty much emphasizing that it is really premature to think about the rate cuts, and the inflation, according to them, is staying pretty much high. And I believe that they are not that wrong. And if they says the inflation does not come back in a timely manner, they're not gonna cut their rates. So that bank is the one staying hawkish. And after that, we have some commentary from Bank of Japan Governor Ueda. We will not go from all of that again. uh, nothing nothing major. Bank of Canada Governor Macklem spoken. We had nothing on Wednesday except crude oil inventories. So this is the thing. On Thursday, September 26th, we had a Swiss National Bank coming out and then decreasing the interest rate by 25 basis points, in line with the expectations. However, they have really revised their inflation projections for 2025 and 2026, which tend to weaken the Swiss National Franc. And if we look as a whole, then uh, Swiss National Bank chairman Jordan, he came out and said he's shown his worries that Swiss is really strong and it is hurting the economy. And also Swissmen, the businessmen from the Switzerland came out and said that they are also worried with the Swiss franc being too strong. Uh, those are the two things, and the third thing is that in the statement, the Swiss National Bank stated that they are actively present to intervene the market. So with these things on, it tends to favoring more that in the near future we can see some weakness in the Swiss franc. However, there are higher probabilities that we can see Swiss franc Swiss franc heading to the downside, but it's not something that written on the stone. So just keep in mind that everything goes in trading is in the probabilities. So moving forward, we had final GDP quarter of quarter, we had unemployment claims, and we had some durable goods. So if we look across all the data we had from the US, came much pretty much solid. And in this data, look at the GDP, we had 3%, and the Fed is currently seeing that the GDP of the United States will come down to 2%. And with the 3%, the US economy is doing pretty great. And with the Fed cutting their interest rates, and with the labor market, you look at the unemployment claims, it really came lower than what the market has expected. Means there are less people actually claiming unemployment from the government, which is good for the economy. And we also had core durable goods coming better than expected. So all of the data is clearly indicating that US is doing pretty good, even though interest rates are still too high. So, with the interest rates coming down and economy doing great with GDP staying at 3%, labor market is cooling but not falling off the cliff. It's a very cozy environment for the equities. Okay, it's very cozy for the equities, and we can see some dollar strength maybe in upcoming datas in upcoming days, as we are clearly let me show you what I'm talking about. This is the dollar index we are having right here, and if we go 4 hours, so if we can see the weakness the dollar got from July 2024, and it just came and sitting here at 100 level. So there is already too much bad things got priced in for the dollar, but but it has no further reason, according to me, that it can still go downward. I mean, it can happen, but the chances of happening in a dollar weakness is very less. So with that being said, after that, we had a bunch of FOMC members coming out and giving their speeches. Some of them gave their statements, but the main one, Fed Jerome Powell, did not give any comments on monetary policy or any other commentary on the economy. So it was pretty much a dud the central bank speakers. Nothing we got out of them, even though we had bunch of them. So uh, with that, we had Treasury Secretary Yellen spoke on Thursday, September 26th. She made some comments. I can't recall that because I was out of the desk. So uh, on Friday, we had Canadian GDP 0.2%. Not that good, but it's still a month on month. So not that good, not that bad. It's just fine. Core PCE came 0.1%. Just a reminder that PCE is a Fed's preferred gauge of to measure the inflation. However, it tends to have very less volatility because the PI, I think, it comes first and PC comes after. So maybe because of that. We had a University of Michigan consumer sentiment and inflation expectation sitting at 2.7%, which is not that bad. No, that was the data, that was the speakers we had last week. Uh, Moving forward to today's week, uh, from China, we had manufacturing, non-manufacturing PMIs pretty much coming in weaker, but not that weak. Just to remind you all that on the last week, PBOC just announced that they're gonna support their economy. They lowered their LPR and the 7-day reverse repo programs. So that was pretty much, and also they asked they lowered our rates for the bank, which means the banks has more capability to lend rather than keeping their cash reserves in their safes. So manufacturing and services are deteriorating, we can see that, but as the most of the decisions has no immediate impact on the economies, it do create impact but in a longer run. So we might can see some positive news coming out of China after this stimulus program, but it all lies in the future, so we will keep an eye on that too. We had German preliminary CPI month of month came in 0.0%. Not that bad in my, yeah, according to me, but it's not something to keep an eye on. I think just good data, bad data. No, sorry about that. Just bad data, but not that bad. We are having a bank holiday from Canada, but nothing to worry about. The usually that we care about the holidays are from the US, from Euro, or from Great Britain, because they have tend to create more volatility than the Canadian banks. So we had Bowman, but he did not make any comments. We already talked about President Lagarde, that she just spoke and told the market that she's not going to wait for 2% inflation to head there before making any strong decisions. Uh, Tuesday, we're gonna have a core CPI and a CPI flash estimate from the Eurozone. This one is gonna be major final manufacturing PMIs. So it's coming at 10:45, and the major one is going to be Institute of Supply Management manufacturing PMIs. So current expectation is that it will tick up a little. We will see that. How, and we also having some labor data, jobs, job opening. So we will keep an eye on that. That if it does, if the data keeps deteriorating in manufacturing index, as I have explained earlier, if you just go to the line bar, that it just got worse and worse, just bounced a little bit. But if we saw a bounce downward crossing this 45.4, mean it's gonna be a major downfall, going all the way back to 2020. So this is something to keep an eye on. Jaws share everything. After that, we're gonna have bunch of Fed speakers. Bostic Cook, governor board member, uh, is also speaking 12:15 Atlantic Standard Time. And after hours, we're gonna have Barklin, Bostic, and Collins speaking. Uh, with that, Wednesday, we gonna have major ADP. So just a quick reminder here that ADP, automatic data processing, tend to not to get aligned with the NFP later we're gonna have on Friday, right here. So ADP may can create volatility, but it can be a short term because this data never aligns with the NFP data. So after that, we're gonna have some Fed speakers. There are plenty of Fed speakers I see that we're gonna have this week. On Thursday, we're gonna have unemployment claims and this ISM Services PMI, major data. So this is something to really keep an eye on. Uh, and the final data, the final one is gonna be NFP. Unemployment rate expected to stay 4.2%, and don't forget that the recent summary of economic projections came out of FOMC stating that they expect that by the end of 2024 the unemployment rate can rise to 4.4%. So if it rises, it can give another push to the Fed to go for 50 basis point cuts. We will see what the data comes in. NFP expected to rise, tick a bit, just a little bit, 2000K, and the average earning is expected to come down. With that being said, this was the video of the week ahead, and hope you all have a great day. And if you have any questions, don't hesitate to let me know. Bye bye.